Good afternoon, everyone. Welcome to today's webcast titled Using UniSearch to Find Great Stocks, Part 1. My name is Brian D'Amico, Manager of Educational Services here at VectorVest, so it's my pleasure to be here today. I'm actually joined by Jerry D'Ambrosio. He'll be moderating today, so he'll be answering your questions in the background through the chat box, and we'll talk about that in just a minute. And I'll bring him in a little bit later to help do some moderating of the questions during the Q&A today. What we're going to do in today's webcast, today we're going to look at using a very powerful tool within VectorVest, an extremely powerful tool in VectorVest called UniSearch, and we're going to be looking at how to use UniSearch to find great stocks. And this is part 1 of a 2-part series, so I recommend registering for part 2 in a couple of weeks. Now this is a live webcast. So what I put up on the screen here is a way for you to submit questions throughout the webcast, and I will be asking for interaction as we go. In fact, in just a moment, actually right now, how about this? If you can hear me, just type in the chat box, which you should see like this. Just type in the chat box where you're watching from. Just type in where you're watching from, maybe city, state. Just go ahead and type in there. Let's see, Norman, Ohio, Stephen from Miami. It's probably probably warmer down there, I bet. John from Texas sounds great. Let's see, Patricia, I missed that one, maybe from Seattle. Wow, they're going through very quickly. We've got a lot of people here today. So let's see, South Carolina, New Jersey, El Dorado, California, Matthews, North Carolina, not too far from here. All right, New York, Georgia, Texas, Little Rock, Arkansas, Missouri, Chelsea is at Michigan. Let's see, Colorado Springs, well, someone from Guam. All right, Patrick, welcome. What part of Long Island, John? I actually grew up on Long Island. And we have a few people saying here they're from Canada. All right, welcome. Welcome, everybody. It's great to have you all here. I guess you can hear me just fine. Now, if you can't hear me, just type, no, I can't hear you. Okay, I'm glad I didn't see anybody type in, no, you can hear me, because then obviously you could hear me, right? All right, so it's great to have you all here. Today, as I said, what we're going to do is we're going to look at using UniSearch, but as you already noticed, you're using this little chat box here. So this is how you, throughout the webcast, you can enter a question. Now, if I don't happen to see it during the webcast, I've got Jerry also, like I said, working in the background. He'll be working on answering your questions, and then we'll come back at the end of the webcast to answer questions during a Q&A session. And also during the webcast, I may ask you to raise your hand. You don't see it on this little screenshot here, but most likely on your control panel, there's a little hand icon. So if I ask you to raise your hand, just click on that little hand icon. Looks like a few of you have already clicked on it. Now, if this happens to minimize, just click on this little orange arrow, because sometimes when it minimizes, it's hard to see. So to get it back over to the left-hand side, just click on this little orange arrow, and it'll come back like this, and that way we can interact together. So I'm going to ask, like I said, for your interaction quite a bit today. So like I said, today's webcast is titled Using UniSearch to Find Great Stocks, Part 1. Now, most of you in this webcast already probably are already using VectorVest. Either maybe you're on a trial or on a subscription already. Now, if you are new to VectorVest, this is where I'm going to ask for a little interaction. Let me get in here and lower the hands. If you are new to VectorVest, click on the little raise your hand icon. I want to get a judge of how many people came to the webcast who are seeing VectorVest for the first time. So let me give you a few seconds to raise your hand there. All right, so it looks like about, let's see, it's about almost 10%. All right, so I see Ken, welcome. You're seeing it for the first time. Bruce says not for the first time. Welcome back, Bruce. So we had, about 7% of the people in the room who are seeing VectorVest for the first time. Don't worry. Even though I will be using the VectorVest product, and I'll be using some terms that are unique to VectorVest, hopefully you're going to see how VectorVest can help you out. All right? So today, let me give you an idea of what you're going to be learning today. What we're going to cover today is, first off, we're going to look at how you can determine your investment style. And I'll explain why in just a little bit. But that's the first thing we're going to do, talk about how to determine your investment style. Second, we're going to look at identifying top-performing pre-built searches that we have in there. So what I'm going to do is I'm going to go through the UniSearch, and I'm going to point out to you and talk about some of the best searches. Because as you'll see, there's probably about 200 searches in there, And I can imagine if you're new to VectorVest, you're probably looking at that thing and saying, wow, which one do I pick? So what we're going to look at is some of the best ones and for each investment style. Then we'll talk about, and I'm going to get some more interaction from you on how to build your own search. So if you're interested in reinventing the wheel, so if you don't like one of the 200 searches we've got, I'll show you how you could build your own search. And throughout the webcast, I'm also going to show you how you can test out searches and refine them over time. And we'll use a feature in VectorVest called Quick Test to do that. All right, so those are the 4 things that we're going to look at in the UniSearch today. All right, so first off, let me actually lower everybody's hand. There we go. All right, so the first thing I said we'd talk about is determining your investment style. All right, that was the first thing. And the reason I wanted to talk about this first, instead of just diving right into the UniSearch, is I think that's one of the mistakes that a lot of people make, is they start off with VectorVest and they see the stocks in the list, or they go to the UniSearch and they just start buying stocks haphazardly. Maybe they see that it has a buy recommendation, and number one, they might not pay any attention to market timing, which we have a webcast later on this week on market timing that I recommend that you watch that one. So they might not pay attention to market timing, or they don't look at the stocks themselves. They don't have a plan for themselves on what they're comfortable with. All right, so what I want to start off here today is, one of the first things I want to do is I'm going to put up a poll in just a minute. I'm going to ask you what type of investor you are. All right, what type of investor do you think you are right now? All right, so let me put this poll up for you. So you should see it showing up on your screen in just a moment. All right, so out of those 4 choices, what type of investor are you? All right, do you think you're a prudent investor? Do you think you're aggressive? Do you think you're conservative? I also think of conservative investors as people who might be thinking of retirement. So if you're in that, or if you're speculative. All right, so pick one. Now I realize there's a bunch of you that might have multiple portfolios. You might have one portfolio that's more aggressive and another one that's more conservative. But overall, which one of these fits your style the most? All right, so it looks like we got about almost 75% of the room voted, almost 80%. So let me close the poll here and let me display the results. All right, let me share the results with everybody. So you can actually see your fellow attendees and who's in the room. Now, I don't know if this is in the order just because I put it on the slide and on the poll this way, but we had 42% of you say you're prudent. We had 30% aggressive, 25% conservative. All right, that's interesting. I didn't think we'd have that many as conservative, and 4% speculative. All right, so I started out with this poll, and it looks like Tom says, yeah, he's a mixture. And I thought we'd have some people who might be a mixture. But I wanted to start out with this poll first, right? Because in just a moment, what we're going to do is take a look at what it means to be each one of these investment styles. All right? We're going to take a look at what it means to be each one of these investment styles, and I'm going to show you an exercise so that you can see what type of investor you have been. Okay? What I mean by that is sometimes I talk to people and they say, yeah, I'm a pretty prudent or conservative investor, and then when we look at the stocks that they've purchased, they've really been more aggressive or speculative. All right, so we're going to take a look at that in just a moment. All right, so what we've done, let me actually go to the next slide here. What we've done is we built this little matrix. All right, we built this little matrix, and before I keep moving on, we had a couple of questions come in, one from Morley and William, asking basically, is this going to be recorded and archived? Yes, unless there's a huge problem with technology. And that's one of the reasons we want people to attend the live sessions, is you never know what could happen with a recording. But our intent is to archive it and send you out a link to the recording and also put it on VectorVest.com. All right? In our events section, by the way. All right, so what we've done is we've put together this little matrix. And let me ask you this. I'm going to get some more involvement here, so use the chat box for me. What are the 2 things that investors consider the most? And you might have had this experience when you sit down with a financial advisor. You sit down with the advisor, and they're going to talk to you about blank versus blank. All right, Dwayne's got it. Tom's got it. I'm not going to give it what they said just yet, so I want to see what a bunch of other people. Wow, 5, 6 7 people in a row. Yeah, yes. Danny, Joan, thank you. Norman, David, good. Ty, exactly. What you're doing, you've all got it, man. You're looking at risk versus reward, right? How much risk you're willing to take versus how much reward you're going to get. All right, so on this matrix that we've put together, and those of you who have signed up for VectorVest already, you should have gotten something in the mail. It's a little green book called Stock Strategies and Common Sense. So just make a little note that what this matrix is here is described in Chapter 11. So if you want a little recap of this, you can go back and read that in that book. So on this matrix, we've got risk versus reward, and here running along the bottom part is risk. So in this bottom left-hand box, this would represent lower risk, all right, so low risk. And then these 2 boxes over here are higher risk. And of course over here is reward. So the bottom 2 boxes would be low reward, and the top 2 boxes would be higher reward. So notice there's 4 boxes and we had 4 investment styles, right? All right, so we had those 4. Now what we're going to do is we're going to start to fill in on this matrix where each of the investors go. And you probably, if you're drawing this on your own, if you've got a little piece of paper, make a little guess on where you think each of the investors' investment styles go: aggressive, speculative, conservative, or prudent. All right. So with these indicators here, with these terms, risk versus reward, we actually have in VectorVest, we have indicators which look at risk. We have an indicator which looks at risk, and we have an indicator which looks at reward. So let me ask you this. Those of you who are using VectorVest, what do you think the indicator is that looks at risk? Which indicator out of our proprietary indicators looks at risk? So just type it in the chat box. Joan's got it. Tom's got it. Thank you. David's got it. Harold. All right. Good. Good, yeah. Almost all of you have got it. There's a few that are mixed in that weren't it. We've got, I'm going to draw it on the screen here. Yeah, we've got RS, right, for relative safety. So if you guessed relative safety, you got it right. So RS stands for relative safety. And which do you think is our indicator for reward? You might even call it price appreciation potential. Which do you think is the indicator for that? Yeah, Gibby's got it. Robert, David, Melvin, Danny. Let's see, Danny, where did you type in there? It's flying by so. Yeah, you got it, Danny. Tom's got it. Yeah, the indicator that looks at reward is, that's an R, by the way, RV. All right, which stands for relative value. Okay, so we got RV and RS. Now, those of you who are familiar with VectorVest know that these are on a 0 to 2 scale, and this is one of those of you, the 7% of you who are new to VectorVest. This is one of the benefits of VectorVest, is that we put these indicators on a 0 to 2 scale. Anything above 1 is favorable, below 1 is not favorable. All right, so with relative safety, actually let me start with relative value. With relative value, above 1 is favorable. Okay, so above 1 would be favorable, so that means that they would have high reward over time, high price appreciation potential. Okay, so these 2 boxes up here would have RV greater than 1. RV, and if it's a good little exercise to do on your own. So RV greater than 1. High reward, and then these down here would be RV less than 1. And don't worry, I've got another slide that won't have my sloppy drawings on it. RV less than 1. Okay? So now this is one where people get tripped up a little bit. If something has high risk, its relative safety is going to be less than 1, right? Relative safety less than 1 has high risk. All right, so instead of having me draw all this on here, let me fill these in here. So we've got all the RVs filled in and all the RSs filled in. And this is where, just to speed things up here, because I wanted to spend a good amount of time in the UniSearch, what I've filled in are all the investment styles. So just to quickly run through the investment styles here. A prudent investor. They're looking for the best of both worlds. RV to be above 1 and RS to be above 1. Okay, both of them to be above 1. That's the best of both worlds. Now an aggressive investor, the stocks that they typically buy will have RV greater than 1. So this means upside potential, for those of you who might not have known that. This is upside potential, so high upside potential. They have a potential to go up in price over time. But look at RS, less than 1. That typically means that they could be a little bit more volatile, right? So they've got nice upside, but they can move quickly. All right, so if that's the type of if you're an aggressive investor, you want stocks that move quickly, right? Or at least the chance to move quickly, because you want some quick gains typically. All right, so that's an aggressive investor. Now a conservative investor, especially when I'm training some of the new employees, they're confused by this. They're like, man, wouldn't they want relative value to be above 1? Well, let me just say this. Just because in this matrix it says less than 1, I just want you to keep in mind it doesn't mean that they really focus on relative value to be less than 1. You can write yourself a little note there that they're not so much concerned with relative value. They're not concerned with upside potential. In our categorization here, we're saying that a conservative investor is more focused on capital preservation. They're more focused on, is this company going to be around? Is this company going to continue to pay me this dividend over and over and over again? I don't really care that it's going to go from $10 to $100. All right, I care that this stock or this company is going to be around, grow their dividend, grow their earnings, so I can continue to get that dividend payment. Now, the speculative investor, there's only 4% of you, so basically a speculative investor doesn't care about either one. They're really just going on news, like a company's, like a drug company might just be releasing a new product and they're hoping it's going to cure cancer. All right, so these are the investment styles. So what we're going to do, now let me just give you a quick little quiz here. All right, I want to see what you know about these stocks, and I do this with new employees just to see how much they know about RV and RS. All right, so I'm going to draw something on the board here, and you tell me what you know about RV and RS based on what I draw. All right, so this is a stock graph. All right, I'm going to draw a graph. And here's a stock. It starts out here, starts there, and I'm going to say over time, let's just say over the next few years, that stock goes from here and it's over here. Okay, so let's look at these two things. So in the chat box, let me know, if anything, what do you know about the RV, if anything, and what do you know about its relative safety, if anything? Like, for example, do you know the RV is greater than 1 or less than 1? Do you know if the RS is greater than 1 or less than 1? Or you could say, based on the information you gave me, Brian, I don't know something about something. All right, so let's see. We've got some people saying RV and RS greater than 1, both greater than 1, both above 1, greater than 1, greater than 1. John says nada. Bob says nothing. Above 1 for both, above 1 for both. Okay, well, all right. So we got Robert says RV greater than 1, RS less than 1. All right. So now let me do this. We got two stocks. So we got that one. And now I think, how about blue? Let's see if we got blue. There's stock A, and blue is stock B. Now I'm going to give you more information. Are you ready? Stock A goes from here to here. Stock B goes from here to here, right? Okay, so stock, what did I say? This blue is B. So stock B goes like this. Whoops. La da 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 da. La da 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 da. This is over a few years, remember. La da da. Okay, so there's stock B, and now here's stock A. Stock A goes like this. All right, so now we got these two stocks, right? What do you know about stock A? About its RV and RS? It went up over time, but how was the ride, right? So in the yeah, very volatile, Rick says, more risky, low RS. Yeah, good. So when I asked initially, a stock that went from here to up here, what I was getting at was that you knew that the RV was most likely greater than 1, but you didn't know anything about relative safety. Relative safety gives you an idea of what life is going to be like in the middle. All right? So that's one of the reasons that it's important to look at both of these indicators, RV and RS. All right, so let's do a simple exercise, and this is going to lead us right into the UniSearch, okay? So this is an exercise I recommend that you do. Okay, so write down these directions. Let me get off my drawing tool. These are simple directions we recommend everybody does. All right, so we're going to build a watch list, and I want you to do this, all right, with your VectorVest. I want you to build a watch list of the stocks that you've purchased over the last 12 months. Okay? Build a watch list of the stocks that you've purchased over the last 12 months. So print out your brokerage statement, and it's perfect time of the year, right? It's tax time, so you might be printing out your trading history over the past year. So print out your trading history over the past year. Build a watch list of all of the stocks that you have purchased over the last 12 months. Then what we're going to do is we're going to look at the average row, and we're going to look at what's the average. All right, so let's do this. Let's do it. So I've already started the work. I'm already in the Viewers tab of VectorVest, and those 7% of you who are with VectorVest or seeing VectorVest for the first time, you can always take out a 5-week trial, and you could do the same type of thing. Melvin, you bought 500 stocks over the past 12 months. I'd say maybe limit it to how about the last 30 stocks that you've purchased. How about that? All right, so let's build a watch list. All right, so let's just call this one Our Stocks. You might, how about this? Call yours My 2013 Stocks. Whoops. Stocks. All right, now obviously the stocks I'm going to ask you for, it's not going to be a representation of one person's portfolio. It's going to be hundreds of people. Harold, great question. What is the average row? I'm going to talk about that in just a second. Good question. All right, so I'm going to put stocks in this watch list. So if you could all just type in one ticker symbol of a stock that you purchased, and you don't have to be, don't be the person that gives me the best performer that you've ever had. All right, so be honest. Pick a stock that is a good representation of what you've purchased over the past 12 months. All right, so they're flying by very quick. I'm going to try and get as many as I can. Facebook, NUS, what is that, Newskin? All right, CW, HBAN, CBII, whoops, cannot be found, WIN, XOM, BP, DDD, Google, KEG, NLY, BB, BA, whoop, BA, BAC, AAPL, HAS, JAZZ, LSI. I'm not sure how many I've got yet. Most likely you've probably purchased a handful of stocks over the year. So let's see, JPM, PPC. Did I get that one already? No. And A from Mike. Let's finish up with that one. Let's just see how many we've got. So however many you've got, just put them in a watch list, all right? This is an exercise where you can determine what kind of investor you have been, okay? So we've built our watch list, right? And let's go back to what our slide said. We built a watch list of the stocks that we've bought over the past 12 months. we're going to look at the average row at the bottom, and we're going to determine what the average RV and RS are. All right, so let's go back to our watch list. So here's our watch list, and what I'm going to do is I'm just going to minimize this left-hand side. There we go. So here's our stocks. Okay, I'm not going to go through all the parameters going across the top. Let's just look down here. Where's my drawing tool? I don't need it. Down here we've got an average row, and this average row does exactly what it says. It's an average of all the stocks in your list. All right, so looking down here, based on this, look at this. We have an average RV of 1.10 and an average RS of 1.11. So, based on that, what type of investor are you? Based on that, what type of investor are you? Are you prudent? Go ahead and type it in the chat box. Prudent, conservative, aggressive, speculative. All right. There we go. There you go. Great. Look, I think we scored about a 95% on that quiz. You're prudent. You're prudent because you got RV and RS above 1. All right, so you favor the best of both worlds. You want capital appreciation and you want capital preservation. All right, so you want appreciation and you want safety. Okay, so we've got, what do we got? 22 stocks in this list. And based on this list, you can even come in here and sort the list if you wanted to. Here's all the RVs. You can see some are above, some are below 1. And here are the RSs. If I sort by that, you can see a majority of those are above 1. All right, so based on the fundamentals, we've been, based on these stocks, more of a prudent investor. So you can take this a couple of ways. You can say, all right, has my portfolio stunk the past year, or have I done pretty good? Now, if your portfolio has stunk, I really recommend that you look back at your trades and see what went wrong. All right, but also look at what went right. All right. Now, you might find that the stocks where you lost, you might find that they had certain characteristics. You might find that they had RVs less than 1 or RSs less than 1. Okay? All right, so you're going to take a look at that. Now, if things are going well, then stay with that type of investment style. If things are not working out so well and you see that the stocks that you've been purchasing put you more in a speculative or maybe aggressive category and you don't want to be that type of investor, focus the types of stocks on that you're looking for towards that investment style. So if you want, I said, what was it, 42% of you wanted to be prudent or said you were prudent. So if you found that the stocks that you put in here had an RV and RS, any one of them below 1, that's where you need to work. All right, so knowing that information, let's now take that information and funnel it into the UniSearch. Now, just so you know, when you watch part 2, which will be probably in a couple of weeks, we're not going to spend this much time talking about investment styles. All right, I'm just going to do a quick recap and say here are our investment styles, and then we're going to go right into UniSearch and look at 3 of the tools in UniSearch. Today we're going to focus on one of the pieces in UniSearch. All right, they're called searches, or we also call them strategies. Okay. So you notice that one of the reasons why we did that exercise at the very beginning was you'll notice in UniSearch. Take a look at this. What have we done here? We've categorized the searches for you. We've got searches pre-built for those of you who are aggressive, conservative, prudent, speculative. So if you are conservative or if you're prudent, I recommend starting with the searches in that folder. Now, I know we've got a bunch of other folders. We have bottom fishing. We have retirement. If you're conservative, that's an okay folder to go into. We've got the shorting folder. But let's just keep things simple. We've got a bunch of searches already pre-built in those existing folders. Start off there. All right, so let's spend a little bit of time and let's take a look at some of the top performing searches in each of the folders. Okay, now I'm not going to spend too much time on the speculative folder. Right? It's a lot of low price things. So I'm sorry if those of you who are speculative, we're not going to spend too much time on those. Let's just go from top to bottom. I guess this is alphabetical order. Let's start off with aggressive. All right, now was there about 10 to 12 searches in there? Now some of the best performing searches that we've got in there, and I'm going to try to do about 3 from each folder and explain what they are, and I'm going to show you how you can test them out. All right, so that way you don't have to just take my word for it. All right, so we've got a bunch of searches in here. One of the ones that is a fan favorite is this one here called bottle rockets. All right, now it's got a lot of criteria for the search here. Now if you are new to VectorVest, sometimes I get lost, and I've been doing this for 12 years, and everything I'm just clicking around here. So if I click too fast, just shoot a little note in there, and either I or Jerry will stop and help you out. Let me give you a quick little navigation exercise. The searches are over here. The criteria of the search appears here. When you run the search, for example, when I click Run Search, the stocks will appear down here. Okay? And we're able to change the date here. So this is showing me the stocks that meet this criteria as of 3:59 p.m., January 14th. But I can change the date and go back in time, and this is where I can start to see how well this search did in the past. Okay? But let's first take a look at this search. All right, so this is the criteria. I'm not going to cover everything on every search because these, where are they? These last 5 criteria, let me see if I can, I'm not going to, basically from this line down, stock price, average volume, industry group, exchange, and watch list. Those 4 are pretty standard on all of the searches. You're going to see those 5 criteria basically on every search because we want to make sure that you're not looking at penny stocks. So we put a minimum price criteria of $1, which we'll talk about how we can change that in a minute. A minimum average volume of 100,000. All right, so I'll show you how to change all this. We're not going to look for, this is saying I don't want to find contra ETFs. I don't want to look for ETFs that short the market when I'm bullish on the market. Yep, Leon, I'm going to show you how to change the criteria in just a second. Actually, not just a second, just a little bit. I'm going to go through the pre-built searches, then we're all going to build one together. And basically this is saying I don't want to look for contra ETFs. Those are basically commodity, like ETFs that are commodities or volatility indicators. So these 5 criteria are on each search. So let's take a look at what makes this search unique. All right, so going through the list, we've got relative value. All right, so relative value has to be greater than or equal to 1.1. So not just 1, has to have higher than that. All right, so the base aggressive investor, they're more focused on upside potential. Notice there's nothing in here about safety. Nothing in here about safety. So they want high upside potential. And here's an indicator that looks at price trend, price momentum. It's also on a 0 to 2 scale. It's above 1.5. So these are shooting up quickly in price. And the earnings growth rate is greater than or equal to 25%. All right, so you got pretty good stocks. You're not looking at the safety at all. And in addition, they're sorted by relative timing. Casey asks, are these more for day trades? These are for, if you're an aggressive investor, these are more shorter term trades. You guys familiar with those fireworks that are called bottle rockets? Right? What happens? You light them, right? You light the fuse, and when they go off, right? They go, phew, right? They go up very quickly, very fast for a short period of time, right? So an aggressive investor, these are the types of stocks that there is good for short-term trades. Make sure you're doing it during market uptrends. Okay, so short-term trades. I remember talking to a gentleman on the phone when I first started, and he said he would run, his basic technique was using this search, and he would do trade options. He would buy calls on them. All right, so whatever you do, I'm not saying that I recommend you do that. I'm just saying that for an aggressive investor, these stocks tend to go up quickly, but remember there's no safety indicator in here, so they could come down just as fast. All right, so that's bottle rockets. Yeah, and Russ has a good point. He says, oh, they could blow off in your hand. Keep in mind, as an aggressive investor, you're taking on a little more risk, right? So yeah, there's a chance that this stock could start to come down, so you want to make sure you have stops in place. Okay? All right, so that's one search. And let me just say, one of the things that you would want to do is test these things out in the past. So let me go back in time, and I'm going to go to our last full signal. We had it confirmed up on September 11th. Now, if you're an aggressive investor, you might not use our confirmed signals for your testing. You might use some of the other signals that are quicker. I just happen to use confirmed calls because it's a little easier for our time's sake here. So I'm going to run the search as of September 11th. Let me just run it again. There we go. These are the stocks that appeared as of September 11th. And what I'm going to do is I'm going to quick test. Only 10 stocks were returned, so I'm going to test these 10 stocks. I'm going to see how they did. Whoops. I'll just use a quick date. So September 11th was a confirmed up. I'll test them to a confirmed down. And I'm going to run this test. So this is how you can test out these searches. That way you're not just taking my word for it. You test them out during this market period, and you say, oh, wow, look at this. On average, the top 10 stocks were up 8.8% compared to the market's 4. Right? Had 6 winners and 4 losers. So that your next step would be, all right, let me test it out during the prior up market. Let me test it out during the market before that. All right? Now, you might say, well, I'm an aggressive investor. I'm not going to hold for 3 months. You might say, all right, well, let me change this to, where's my dates here? Where's September? There's September. How about I just hold it for, was it 1, 2, to the end of September? So that's basically 2 weeks, right? I think I chose September 30th here because that was actually an RT kicker combo signal. So here's our green, yellow, and it was our first red light with our RT kicker down. So let's see how they did there. All right, so you can see in 2.5 weeks, you had 9 winners, 1 loser, 7% gain. You did have 1 stock go against you, but this is where you can take these searches and say, wow, it worked here. Let me try it in a prior market. All right, so that's bottle rocket. So, oops, it does this sometimes, goes back to the PowerPoint. So that's bottle rockets, quick pop in stocks. One of people's favorites, and this is a search that tends to do well a lot, it's this one, best stocks under 20. A lot of times aggressive investors are liking these low price stocks. So we got best stocks under 15, best stocks under 20. I'm just going to give you a quick overview of this search. This is really just finding the stock out of all the 8,000 stocks that we've got. If you sorted them all by VST, and you can see that up here, VST is the sort, these are the stocks that are under 20. So those of you who are familiar with VectorVest, if you were to go to the stock viewer and look for the stocks that are below $20, it's basically the stocks that get returned from this search. So let's just run this search, and let's just quick test them again. Let's see how they did. All right, so now this is after 2.5 weeks. Not bad, 2% in 2 weeks, 41% annualized. If you were to take that all the way to December, not bad. Wow, this one really took off, right? All right, so it's 17%. All right, so best stocks under 20 and bottle rockets, 2 of the best searches in this folder. Let me just highlight one more. It's this one here, high flyers. All right, let's take a look at the criteria of this one because it's not quite just the top stocks in the stock viewer. We've got, once again, relative timing is quite high, over 1.25, so they're in a nice strong uptrend. They've got high upside potential. So that's the 2 indicators here. They're flying high, right, as the name implies. They're in a nice strong uptrend. They got a nice upside potential. Once again, what is not in this search? Relative safety, right? So these stocks can shoot up quickly but can come down as well. All right, so, and once again, you're going to test this out. This one, 31%. Obviously, as an aggressive investor, you're going to cut ties on some of these stocks before this. And who knows, you might not let this stock run 90%. You might take gains a lot sooner than that. Hopefully that's in your trading plan. All right? So are there other searches in here that might have done better during this time? Sure. Are there other searches that might have done worse? Probably. But I wanted to highlight 3 of the searches that typically do well from this folder. So if you want to start someplace, maybe start your testing there. Okay? So that's the aggressive folder. Main thing here in aggressive, it's focusing on upside potential, focusing on price trend. Uptrending stocks, strong uptrending stocks with nice upside potential, with no care for safety. That way you can find stocks that shoot up very quickly, very fast. All right? So that's the aggressive folder. So if we come down, I'm going to chunk in conservative with retirement. All right, so we got these two folders. When I think conservative, I think people who are also thinking about retirement. In this folder, actually, the ones I wanted to highlight were more in the retirement folder. But just know, if you wanted to look for dividends, that's the conservative folder, okay? Most of these, I think all of the searches in here are focusing on dividends. Okay, so let's close this up. So in the retirement folder, this one right here, Don's Dividend Dandies, has been one of the top performing searches for years. All right. Now, it does have a criteria in here called Delta, which I'm going to talk about in part 2 in a couple of weeks. All right. A Delta search I'm going to talk about in a couple of weeks. All right. So, but I just wanted to highlight it since it is in this folder. It's looking for stocks that have a buy recommendation, that have a dividend yield that is I'll just say this, it's increased its dividend yield more than 10% over the past 13 weeks, which is a quarter, right? And the stocks are sorted by the best combination of dividend yield and earnings yield. Dividend yield and earnings yield. So if I run this search, if we look at the stocks here, now you'll notice some of them actually do have a relative safety that's less than 1 because it was not a criteria here. But notice they all have buy recommendations. And if I scroll over, notice they all pay a dividend. This is in the retirement folder. They all pay a dividend. And the dividend yield has increased more than 10% over the past quarter. Okay? So that's Don's Dividend Dandies. Oh, in case you were curious, let me just quick test this one. How did it do? Wow, this one did extremely well. 9 out of 10 winners, 21% and that was a confirmed market period. So this one you did get capital appreciation in addition to those dividends that we were looking at. All right, so let me highlight 2 more. This one we highlighted on our Strategy of the Week presentations throughout 2013. It's called Premier Growth Stocks. All right, Premier Growth Stocks. Let's take a look at this, because some people sometimes get confused by the sort. All right, so if I run this search, the stocks will be sorted by VST times RT times CI. So the best combination of VST, which is value, safety, and timing, that's our master indicator. We put more emphasis on relative timing here, so we're factoring in relative timing. And CI, I don't have a ton of time to talk about CI today, but just know it's looking at price growth persistence. All right, so the stocks are sorted by the best combination of those 3 things. And if we look down here at the criteria, the earnings growth rate, greater than or equal to 14% a year. Looking at a nice high market cap. Let's see, and these are the last 4 of those standard 4 things. So we're looking at some nice fundamental based on VST and its growth rate. Some big companies that are also in a nice uptrend. So they're growth companies, as the name implies, premier growth stocks. Okay, so now the last one in this folder, actually I forgot to test this one out, quick test all. All right, not bad, 8%. That's 33% annualized during that up period. Not bad. All right, and last one, this is one of our all-time favorites. Where'd it go? There it is. High VST and YSG. All right, see this? VST, and I already talked about what VST was. YSG. It'll help if I run the search and show you. You notice where YSG comes in? What do you think the YSG stands for? Quick, I'll give you 5 seconds to type it in. What does the Y stand for? What does the S stand for? What does the G stand for? See if you guys are paying attention. Some of you might nod off. You know, you might be doing check your email. So don't check your email. Let's see if you're paying attention. All right, those of you who get it right, you're going to get a high five from far away. Robert, Therese, Bruce, looks good. Dan, Casey, wake up, Casey. You got all Z's in there. Bruce, good. Jim, yes. High five for everybody who got it right. Dividend yield, dividend safety, dividend growth. All right, so YSG is our master indicator, which combines dividend yield, dividend safety, and dividend growth into one indicator. It's kind of like the VST, but for dividends. All right, so here we're sorting this entire list by a combination of VST and YSG. So we're getting good stocks with good dividend information coming to the top of this list. But look at what we're also getting. We're making sure that the VST is over 1. We're making sure that the YSG is over 1. And by the way, it's on a 0 to 2 scale. All right, its relative safety is over 1.25. Remember, conservative investor is typically focused on safety. So relative safety is very good at over 1.25. Growth rate, greater than or equal to 10, earning 10% a year. All right, so you get some. This is one of our favorite searches in this folder. High VST plus YSG stocks. So if you're looking for nice dividend, nice safe companies that pay a dividend, and look at this, that pay a very safe dividend. You might not get the highest yield in the world, but you have a nice safe dividend. This is a nice search. All right, so that's the retirement folder. I'm not sure if I quick tested this one, so let me just run it. All right, it's almost 7%, 27% annualized. Nice. All right, so where did I leave off? I think most of you were prudent, right? How could I almost forget about you guys? I almost forget about my prudent people. Let's go to the prudent folder. I actually got 4 searches in here because there's a lot more searches in the prudent folder. There's 4 searches I want to highlight. The first one here, Chappell's Champs. I mean, if you're a VectorVest subscriber for any number of time, any amount of time, you've heard of this search, Chappell's Champs. This is one of our most popular and best performing prudent searches that we've got. Okay, Chappell's Champs. What this is doing, look at this one criteria right here. Out of all 8,000 stocks that we look at, this search is only looking at the stocks that are in the top 100 VST. That's it. That's all it's looking at, the top 100 VST stocks. That's it. And it's going to take those 100 VST stocks and it's going to sort them in a unique way. It's going to sort those 100 stocks by the best combination of VST, comfort index, and earnings growth rate. All right, so it takes the top 100 VST stocks, resorts them into a new list based on this sort right here. All right, so if I run this, here we have these stocks. Notice buy recommendations come up to the top. So this is one of our most popular searches. Let's just quick test this during this up period. All right, 6%. Now this one, it didn't 4 winners, 6 losers. It might turn you off during this up period, but trust me. Now, first off, out of a basket of 10 stocks, you're up 6%, and that's even letting this one go down 40%, 25%, 27%. Most likely, you would have cut those short a lot sooner than that. All right. Typically, a prudent person will have like a 10% stop. All right, and even these guys, you might have sold them at a 20% gain, 25% gain. So you're looking at some gains here. All right, so that's one of our popular searches, Chappell's Champs. I wanted to show you this one here. This is one that I like. Turnaround candidates. But take a look at this. It's looking for stocks that have a relative safety over 1.25. It's got a relative value over 1.25. All right, so not only do they meet the criteria of a prudent investor, they're up there, right? 1.25. They're pretty good fundamentally. But look at this. The relative timing or the short-term price trend is below 1. So it's called turnaround candidates because this is basically looking for stocks with good fundamentals based on these two, good fundamentals, but right now they're out of favor. Okay, so this is a nice little, you can think of it as bottom fishing maybe. Stocks that are ripe for a turnaround. So this is maybe a good one to run when the market is turning around and coming up off a bottom. It's probably not the best search to run when the market has been on a 6-month upturn. Okay? So let's just take a look at this. Here you can see, look at these nice RVs, nice RSs, but the relative timing is below 1. So we're saying these are stocks that are good turnaround candidates. Okay? So just for curiosity, let's see how it did during this upturn. All right, well, look at that. 9 out of 10 winners, almost 7% gain. So not bad. That was a good one. 2 more I want to show. I've got to show this one, top VST vector stocks. In case you just don't want to go to the UniSearch tool, in case you don't want to go to the stock viewer, this search right here, top VST vector stocks, is basically going to return the stocks from the stock viewer, except it's going to make sure it's only going to return stocks that have a price over 1 and an average volume over 100,000. So this search right here is basically the stock viewer. All right, let's just see how that did. It'll be a good test. Let's see how the stock viewer stocks did during this upturn. Not bad. We had 31% gain. Can't argue with that, right? All right, so that's top VST vector stocks. But a lot of people ask me, they say, Brian, I want to find the stocks. The stocks that are in the stock viewer, they've already had their run. They've already been going up. I want to find stocks that are just coming into being top VST stocks. Well, what we did is check out this search. Top 20 newbies. So if that's your concern, what is that? Bruce says Gouda cheese for Brian. What is that? Top 20 newbies is one of those searches where it's looking for the stocks. Here are the 2 main criteria. 1 week ago, the stock was not equal. This means not equal to. 1 week ago, they were not in the top 20 VST. And the time you run the search, they are in the top 20. So for those of you who say, I want to find stocks that are that have just moved into the top 20, that are at the top of the stock viewer, that are brand new, here's a search for you. All right, so 1 week ago they weren't, and now they are. So they're just moving up. Now also look at this. The VST has to be over 1.4, so very good to excellent. Price is over 5 and average volume is over 250,000. So let's just run this. Notice you've only got 6 stocks that got returned. So keep in mind, you're only dealing with 20 stocks that you could find. So here it returned 6. There are some days where you're not going to get any stocks, all right, because maybe the top 20 has been the same week over week. There's a chance of that. All right, so not bad, right? 24% in 3 months. All right, so let's close that. So those are the top VST vector stocks, and there's one search I did want to show before you and I build our own, and that's in the special searches folder. It's just another search that I really like, and I'd hate myself if I didn't show it to you. Wow watch list winners. We've got a watch list in VectorVest called the WOW. It stands for the watch list of watch list. So this search finds stocks that are in that watch list. It's basically stocks that are being touted by newsletter writers and out there, and we put them in a watch list so that you can sort them based on our indicators. So we're going to make sure that they're in that watch list, but they have a buy recommendation. And notice this sort up here. It sorts them by VST divided by actual price, which means these stocks are going to have a high VST but a relatively low price. I'm not going to get into the math and how this works, but basically that's how it works. All right, so that's another search. So I believe what I highlight, 3, 6, 9, 10 or 11 searches. Keep in mind, you're not going to focus on all 11 searches. Those of you who are prudent, I gave you 4 searches that you could look at. Those of you who are aggressive, I gave you 3 that you could start to look at. And what you're going to want to do is test them out. I only showed you testing them during this last up period. Based on what you learned from a prior webcast on market timing, you would have selected a market timing signal that matches your investment style. All right, so you're going to test out your searches on prior market periods. So if I liked WOW watchlist winners, I'd run it here and quick test it. All right, 12%, 8 out of 10 winners. Then I'd come in here and say, all right, what was the confirmed up period before that? And I'd come back to here. I'd run it here and test it again. Okay? And Steve's got a great point here. He says you could always also cherry pick from the top of the list. Yeah, you got a list of stocks. You can pick and choose. You can pull up graphs. What we're going to do, we're going to have a webcast in a week or so where we're going to teach you cherry picking techniques as well. All right, so basically you're going to set the date, come in here and quick test. We'll see how this one worked out. So I'm going to test this from July 5th to August 16th. Let's see how it did. All right, now this one, it went down 0.43% during that period, but most of it was due to this one loser. All right, so if you were to control losses there, you're looking at 6 winners and 4 losers, right? That's a pretty good percentage. All right, so I would recommend then testing it in another one, and then the one before that. And now I promised you guys that we would spend some time. I'd show you how to build your own search and how to modify these. Let's use the last few minutes to do that. I'm going to get you guys involved again. Let's start off with 2 things. What are the first 2 things you want to make sure your search has? What are the 2 things you want to make sure your search has? It's got to have, you can type it in the chat box. I've only got one person there. Mike says RS. Arnaldo's got it. Yeah, you want to make sure that you're looking at price and volume, right? All right, so the first person to type this in, what is a price criteria that you look at? You want price to be greater than or less than what? You tell me. Okay, Arnaldo, you're quick on the trigger finger there. He wants price over $10. So this is what we're going to do. You would come in here to build your own search or to modify searches. You come in here and you click on parameter, and you see there's 3 choices. We're going to focus on stocks, right? Go to stocks, and notice you got the categories here. These are the categories just like we have them in the stock viewer. All right, so we're going to go to stocks. This is a price criteria, so I'm going to come down to price. And there's 2 different things. There's price split adjusted, and where are you? Price actual. Since I want to make sure that the price was actually trading over $10 on the day I run my search, I want price actual. I want to make sure the price was actually trading at that price. Then I come to operator, and then you've got these choices here. Equal to is equal to. Some people don't know what this means. This means not equal to. All right, so Arnaldo said he wanted to be greater than. And then when you come to the value box, you just click in there and choose custom value. And we're going to do 10. All right, I see Robert. He says the other one. He wants he wants the volume to be over 300,000. I'm guessing probably average volume. Russ says 500,000. All right. To do that, now I'm going to start to go a little bit faster just looking at the clock here. Go to stocks, price volume, and we're going to choose average volume right there. And we're going to do greater than and do custom value. And what did you say, 300,000? So 300,000. All right, so anybody like dividends? Just in the chat box, put in whatever criteria you're looking for. What do you like about stocks? Do you like dividends? Do you like safety? Do you like value? What kinds of things do you want to look for? And I'm going to quickly, I'm going to show you how to build some of these things. Let's see. Michael says dividends, but specifically, tell me what. Oh, there we go. Forrest says he wants a dividend yield greater than 2%. So let's do that. Dwayne says he wants the earnings growth rate greater than 25%. All right. So what do we say? Dividend yield over 2%. So you're going to come to the parameter box, go to stocks, dividend analysis, dividend yield, greater than, custom value, 2%. Now keep in mind, let's just go to, keep this simple, let's go to September 11th because we've been using that this whole time. As you build your search, what you could do is run your search and quick test it, and you can start to see if you're making it better or if you're making it worse. All right, so here we ran it. Wow, we've got a pretty good search as it is. 10 winners, no losers, 11%. All right, so whoops. So then you can continue to come in here, and I think we're going to spend more time on this in part 2, where we're building searches. All right, so I'm not going to use up all the time here, but come to the next webcast on part 2, and we're going to be building trends. We're going to be building deltas and high lows, because I want to be respectful of your time. But keep in mind, you just come to stocks, come to any criteria that you want. Here's all the dividend information, the price information, capital appreciation. All right, so, and I'm going to stick around for a little bit to answer some questions. So today I hope you learned these things: how to determine your investment style, top performing pre-built searches, how to build your own search, how to test it with a quick test, and how you can start to refine things by tweaking it a little bit. We're definitely going to spend some time on that next time as well. All right, so officially, before we get to the Q&A, that's the end of the full content. All right, I'm going to stick around here for some Q&A. And then if you, of course, have other questions, be sure to give us a